Inflation. It's an economic phenomenon we all feel but rarely fully understand. Simply put, inflation is the continuous rise in the general level of prices, meaning that over time, the same amount of money buys fewer goods and services. This erosion of purchasing power is especially troubling during periods of high inflation, where the value of cash and even bank deposits fails to keep up with the soaring cost of living. Let me give you an example. If the interest rate on a savings account is 1% but inflation climbs to 10%, the real value of your money shrinks significantly. So, what can we do to protect our savings? Is there a way to preserve or even grow our wealth in the face of rising prices? In this episode, we're diving deep into 5 asset classes that have historically helped investors shield their wealth from inflation. Let's begin. 1. Stocks. Stocks are often regarded as the cornerstone of a well-balanced investment portfolio. Why? Because they represent ownership in a company. As businesses grow, their value and, by extension, their stock prices tend to increase, often outpacing inflation over the long term. But how do you choose the right stocks during inflationary times? Here are some key strategies. Focus on essential industries. Companies involved in producing raw materials, agricultural goods, or energy are better positioned to pass increased costs onto consumers. Look for high-margin businesses. Industries like IT, healthcare, and renewable energy tend to thrive during economic shifts due to their ability to maintain profitability even as input costs rise. Invest globally. Diversifying across international markets can protect you from country-specific inflation trends. While stocks can deliver substantial returns, they also come with risks, particularly in the short term. Market volatility can be nerve-wracking, so it's vital to adopt a long-term perspective and diversify across sectors. A balanced portfolio is key. Remember, even during inflationary periods, some companies may struggle. Spreading your investments reduces the risk of any one failure significantly impacting your portfolio. 2. Inflation-linked bonds. Now let's turn to a more defensive option: inflation-linked bonds. These bonds are specifically designed to protect your capital against inflation. Their face value adjusts in line with inflation indices, meaning that as prices rise, so does the value of your investment. Government bonds are one of the most popular options for risk-averse investors. They work like this: you lend money to the government for a set period, and in return, you receive periodic interest payments with the principal adjusted for inflation. Short-term bonds. These have fixed interest rates but don't typically offer much inflation protection. Long-term inflation-linked bonds. These can outperform other bonds during periods of high inflation, as their variable returns rise alongside price levels. Corporate bonds are another avenue to explore, but they come with added risks, such as the issuing company defaulting on its obligations. Because these bonds often correlate with stock market performance, some investors prefer to use ETFs that track inflation-protected assets instead. So, are inflation-linked bonds worth it? Absolutely, particularly for those seeking stable, predictable returns in a high-inflation environment. But keep in mind, their effectiveness diminishes during periods of low inflation. 3. Gold and precious metals. Gold has been a symbol of wealth and stability for centuries. During times of inflation and economic uncertainty, gold and other precious metals often shine brightest. Why is gold so effective? It's scarce, durable, and universally valued. As the cost of living increases, so does the appeal of tangible assets like gold. Here are your options for investing in precious metals. Direct investment. Buy physical gold, such as bullion, coins, or jewelry. Indirect investment. Trade gold ETFs, invest in mining stocks, or purchase futures contracts. But gold isn't without its downsides. While it provides long-term stability, short-term prices can be volatile, especially if rising inflation coincides with interest rate hikes. For those looking for a more diverse portfolio, consider including silver, platinum, or palladium alongside gold. For something even more unique, explore alternative tangible assets like fine art or rare collectibles. These require expertise and larger capital but can deliver excellent long-term returns. 4. Real estate. Real estate has long been considered one of the safest investments, and for good reason. Property values tend to rise alongside inflation, and real estate can generate income through rentals or sales. There are multiple ways to invest in real estate, including flipping houses, buy undervalued properties, renovate them, and sell for a profit. Long-term rentals. Invest in residential or commercial properties to earn passive income. Crowdfunding. Join platforms that allow you to co-invest in larger projects, diversifying your risk. Real estate is unique because it combines potential for capital appreciation with income generation. Additionally, during periods of inflation, rental prices often increase, boosting the returns for landlords. However, real estate requires significant upfront capital and careful market analysis. Location, market demand, and property type all play crucial roles in determining profitability. 5. Foreign currencies. Finally, let's talk about foreign currencies. If your local currency is losing value due to inflation, shifting some of your savings into stronger foreign currencies can provide a hedge. Popular currencies for this purpose include US dollar, euro, Swiss franc. While currency trading offers flexibility, it's not without risks. Exchange rates are notoriously unpredictable, influenced by central bank policies, geopolitical events, and global trade flows. A single announcement from the Federal Reserve or the European Central Bank can drastically alter currency values overnight. For most investors, currencies are best used sparingly and as part of a diversified portfolio. In summary, inflation doesn't have to erode your savings. By diversifying across asset classes, stocks, bonds, gold, real estate, and foreign currencies, you can protect and even grow your wealth during challenging economic times. But remember, there's no one-size-fits-all solution. Your investment strategy should align with your financial goals, risk tolerance, and time horizon. If you found this guide helpful, don't forget to like, subscribe, and hit the notification bell for more tips on managing your money. Share your thoughts in the comments. What's your favorite way to beat inflation?